Hey everyone, in today's video I'm going to be talking about 10 quick things that you can do to kickstart your financial fitness journey. Hi everyone, I'm Star Tower, your financial fitness coach, here to empower you to become financially healthy and to live the life and retirement that you and your family deserve. Welcome to Fitness Fridays, where I give some quick wins or short-term exercises that you can do to kickstart or stay on track in your financial fitness journey. So for those of you who have decided to finally kickstart your financial fitness journey, I just want to say congratulations. This is such an amazing decision for you to make, and I think in the short term it's going to, kind of be a little painful, but in the long term you're going to realize what a great decision this was. So to start you off, I'm going to share with you 10 quick exercises to incorporate into your financial fitness workout. And these are basically kind of like building blocks to help you build towards more intermediate and advanced kinds of exercises in the future. And if you already do some of these things, you're already off to a great start. And I would ask you to maybe consider some of the things that you aren't doing, or maybe to just kind of revisit the things that you are doing and see if you can improve upon them. So without further ado, let's get started. So first off, let's start by setting a financial fitness goal. And I would encourage you to focus on just one goal so you don't get overwhelmed and end up quitting in the middle. I also encourage you to have that goal be as measurable as possible. So instead of being vague, like, oh, I want to create a budget, or I want to save money, I would suggest that it be measurable. Like, I want to save, like $1,000 out of my paycheck in 2 months, or I want to create a budget where I have 20% of my paycheck be directed towards savings, and within 6 months, for example. So having a clear and measurable goal allows you to have a direction and a target to work towards, and allows you to track progress to make sure you're on track and to course adjust if you get off track. Number 2, track your expenses. I would encourage you to write down all your expenses for a week to get a clear picture of how much you're spending and where your money is going. Awareness is a crucial step to better money management and to helping you be more mindful of where your money is going and whether that purchase is a need to have versus a nice to have. Can you tell I work in product management? Nice to have, need to have, or don't need at all, so don't build or buy. So anyway, if you kind of charge your purchases to credit cards, you can easily just look at your credit card statements to see where your money is going. But if you are more of a person that pays by cash, it's going to be a bit more of a manual process because you'll have to note down all the expenses in a notebook. But that might help you be more mindful as well of whether you want to spend that money. Number 3, create a simple budget. Having a budget helps to ensure that you're living within your means. That is, your cash inflow is higher than your cash outflow. By allocating specific amounts to different spending categories, you're able to prioritize necessary expenses, reduce unnecessary ones, and have the rest go towards either savings or debt repayment. A good benchmark to use is the 50-30-20 rule, where 50% of your income, and I would suggest using your net income, goes towards needs such as transportation, rent, food, etc. 30% goes towards wants, such as discretionary spending like going out or gifts, and the rest of the 20% gets allocated to savings or debt repayment. Then you can look at your cash inflow, how much you're making a month, and then your cash outflow, how much expenses you have on a monthly basis, and then kind of compare it to that benchmark to see if you're on track. And of course, you can make adjustments to that budget as your needs change over time, but this is just to get you started with a budget. Number 4, automate your savings. Set up an automatic transfer between your checking and savings account so that on payday, a certain portion of that income automatically goes towards your savings account. I call that the set it and forget it approach because it helps to ensure that a portion of your income is consistently and automatically saved without you having to think too much about it. And the rule of thumb here is to save 20% of your income. But if that's not possible for you at this moment, I would maybe start with 10 or 15% and then increase it as your finances increase. Number 5, build an emergency fund. An emergency fund is basically a financial safety net for unexpected expenses, such as car repairs or maybe medical bills, or events that are unexpected, such as maybe job loss. By having an emergency fund, this helps to ensure that you don't go into debt or get derailed from your financial fitness journey when emergencies occur. The rule of thumb is to have 3 to 6 months of living expenses covered, but aim to start small. Maybe you could start with $500 to $1,000, and you can even use the method from step 4 where you set up an automatic transfer from your checking account to your savings account to go towards that emergency fund. Number 6, cut out one unnecessary expense. Start by reviewing your spending habits and maybe identify a unnecessary expense that you can eliminate or reduce. Maybe it could be daily coffee runs, unused subscriptions. This small change not only helps you to save money, but also helps you to be aware of where your money is going, and this sets the stage to help you be more mindful of your spending habits. So for me personally, I aggregated all my subscriptions and realized I spent about $5,000 in subscriptions. And there were some of them that I didn't even know I had until they renewed automatically, which is how those sneaky little bastards get you, because they don't send you an email, it just automatically renews, and then suddenly you're just charged X amount of money on your credit card for them. So what I did was I reviewed all my subscriptions, and for the ones I hadn't used in 3 months or more, I basically canceled the automatic renewals on those. Number 7, start paying off your debts. Take a look across all your debts, and if it's a lot, it's okay. Just take a deep breath, breathe, and identify one debt that you want to focus on paying off first. And there's a couple approaches to this. The first one is called the snowball approach, where you identify the debt with the smallest balance and pay that off first. Or the avalanche approach, which is where you take the debt with the highest interest rate and focus on paying that off. Whichever one you choose, it's fine. This will help you see progress, it's going to help you build momentum and confidence, and that in turn is going to motivate and encourage you to keep going. And as you pay off each debt, you free up money to tackle another debt, and that basically creates a cycle where you're continuing to pay off debt, and then eventually one day you'll be debt free. Number 8, check your credit report. You can request a free copy of your credit report from annualcreditreport.com. Federal law gives you the right to get a free copy of your credit report every 12 months from each of the 3 credit bureaus. And I know most people don't really know their credit score or do this until they need to open up a credit card or they need to make a major purchase that requires a credit check. But this is really important because not only do you get an understanding of your credit history and where your credit standing is, but it allows you to see if there's any outstanding debt on it. It allows you to address any errors or discrepancies that might impact your credit. And also, given all the data breaches that have been occurring lately, you want to make sure that no one has opened up an account in your name. Number 9, negotiate on your bills. So contact your service providers like your cable, your phone, your internet service providers, and see if you can negotiate lower rates on your bills. Don't be afraid to tell them that you're thinking of canceling or switching providers. And if you have a competitor pricing that's lower than what you're currently paying, see if they can match or even beat that price. Also inquire if your current provider isn't running any promotions or offering any discounts, or if there's any bundles that you can leverage to lower those costs. And besides the price, you can also negotiate for added benefits like increased service levels, waived fees, or upgraded equipment at no cost. Number 10, educate yourself. Financial knowledge helps to empower you to make smarter financial decisions, and it also helps to remind you that this is a skill that can be learned and developed over time. So commit yourself to reading a book or watching a YouTube channel or listening to a podcast or even going to a financial seminar this month. There are 10 financial fitness exercises that you can incorporate into your financial fitness journey. So thank you for watching my video. If you found this content helpful, please give it a thumbs up and subscribe to my channel for future content on financial fitness. And please comment below on which ones you've adopted. If this resonates with you and you want more coaching or advice on how to kickstart or keep on track with your financial fitness journey, please contact me below for a complimentary discovery call, and we can better assess your personal needs. Until then, let's continue on this financial fitness journey together, and see you in my next video.